Hello everyone, this is Mohammed Akif with Akif CPA, and today we'll be discussing what is the difference between cash accounting and accrual accounting. This is one of the most common questions I get from my clients when we are discussing financial reports, when we're discussing how we need to do year ends, especially when we're doing monthly bookkeeping, yearly bookkeeping, quarterly bookkeeping. This is one of the main questions because, of course, not everybody's an accountant. And then that's the reason we are here for you. We want to help you, and then we want to get you the understanding for you to make the right decision for your business. Do you want to use cash accounting, or do you want to use accrual accounting? Both has its pros and cons. We'll be discussing those, and then so we have a lot more videos on bookkeeping, accounting cleanups, multiple year bookkeeping cleanups. We have year-end financial reviews, what you should be looking at, videos on those two, quarterly financial reviews, what you should be looking at, and then what exactly you'll be focusing on. Because the idea is that good timely bookkeeping saves you taxes, and this is true because good timely bookkeeping will give you the financial data, will give you the information for you to make decisions for your business for tax purposes, right? And also for operation. Will give you where you can see where your income is heading, where you can see if you can make certain moves which can get certain deductions, which can save you taxes. And this is how we are linking good timely bookkeeping to saving taxes. If you do it on time, you can save a lot of money. It's not about making the most money. It's just not about making the most money. It's also about taking the most money home. And this is where the tax planning comes in. So if you don't have the data on time, a good financial data on time, you won't be able to do that. So again, email us if you have any questions, info@akifcpa.com. This video is about what is a cash accounting versus accrual accounting. And then we'll get into some details, discuss some points, and then give you some idea of what we are talking about. So let's get started. I'm going to share my screen with you. So we do have a Xero opened up. Let me see if I can share this, and then so you can see what I am seeing. Right, so perfect. So let's talk about first what is cash accounting. So cash accounting is technically, in a very simple way, whatever the money is coming in, actual cash or actual check or actual direct deposit, electronic funds, that's what is counted as income. Whatever is going out, actual cash, check, payments, that will be reported as expense. Simple. Whatever is actually in your hand when it's coming in and whatever is going out, that's cash accounting. And then so I'll show you, and then what is accrual accounting? In accrual accounting, you can have recorded invoices. So let's say, for example, if you're in service industry, you bill a client of yours for $5,000. As soon as you invoice them, that becomes income, regardless of you collecting it or not. Right? And then so in terms of the expenses, if a vendor sends you an invoice for you to pay them, as soon as you receive them and record them, that becomes an expense. Whether you pay this or not, it's irrelevant. What matters is that you record them and put them in your book. So in accrual accounting, as soon as you create an invoice for the work, that will be recorded as income. If you get an invoice for you to make a payment or you owe money to someone and you record it in your system, that will become an expense. So that's the biggest difference, right? So it is a timing difference. What it comes down to is what cash versus accrual. Cash, whatever you have in your hand, coming in, going out, that's what the timing is. And then accrual is, even though you might have not received it, the income, it becomes income to you. Even though you might not have paid it, if you have received the bill, it becomes expense for you. So I'll show you how it works in reporting, and then you'll see a big difference when we are talking about this. So let's pick this year. All right. So I'm going to just go all the way. Update. Let me see, what is this? So this is accrual accounting. No, I don't want August 1st. How much? Perfect. So you can see in right now we have picked accrual accounting. So in accrual accounting, we can see it's showing the income. We'll just focus on income right now. we can see income as 22,973 and 18 cents. So that's the income that we see. So that means this is what they have built. Now, watch carefully. As soon as I pick cash basis, what's going to happen to 22,973? I'm going to update. And then it shows as 14,488.73. So here you go. There's a difference right there, right? So out of the 22,000, they have only collected 14,000. That's what it means. And then so in cash accounting, you will only record that 14,000 as an income, even though you have billed for 22,000. We'll go one more time and look at it. So accrual accounting, the income is 22,973. That means this is what the invoice has been, not what they have collected, what the invoice has been. And then as soon as you turn into cash, you can see out of the 22,973, only 14,488 has been collected. So that's the biggest difference between cash and accrual. The income. How do you report income in accounting when it comes to cash and accrual basis? So that's the same rules apply to expenses. So we're looking at cash right now, right? So look at the expense. Total operating expense is 14,068. So what happens when we pick accrual? Let me see. Here you go. It's 19,000 now, right? So we went from 14,000 to 19,000. I'm going back to cash again. It was 14,000 in cash. And then as soon as I pick accrual, becomes 19,000. So again, this is, so when I say cash, what they're saying, what the report is telling me is that they have paid out, they are supposed to pay out 19,000 in expenses. And as soon as I pick cash, it tells me they've, out of 19,000, they've only paid out 14,000. So there's a difference of, 5,000 in combined that still need to be paid out. So if we were going with cash basis, we can see what the profit is. And then if we were doing with the accrual basis, we can see, so what basis is this right now? So this is accrual basis. Your profit with accrual basis is 3,000. If you're doing cash basis, let's see what the profit is. It's only $419. That's because they have received less money and they have paid out less money, right? So this is in the profit and loss. Let's look at the balance sheet account. I mean, we must look at the balance sheet, how it affects the balance sheet. So we're going to pick December. All right, so let me see. This is accrual basis. In accrual basis, it shows us the bank balance at 61,000, account receivable 9,000. Do you remember the 12,000 and 14,000 in difference? This is where the 9,000 comes in. So they still need to collect 9,000. That's the key here. And then of course, there's a payment that needs to be paid out. Liabilities to account payable shows that 8,000. They still need to pay out more money. And then we have some adjustments. Sales tax needs to be paid out. So this is accrual basis. Current year earning is 3,000, as we talked about. So let's compare this to cash basis. All right, so let's do cash basis. Oh, it's taking its time. There must be a lot of transactions. All right, so look, the bank balance does not change. What is changing it? The accounts payable is gone. The account receivable is gone, right? Because in cash basis, accounts payable and accounts receivable are irrelevant. It's whatever money you have received and whatever you have paid out. That's what matters. Look at the profit in cash basis for $19, right? So this is another big difference when it comes to balance sheet. In balance sheet, your accounts payable and accounts receivable will not be reflected. In accrual basis, they will be reflected. We can see this again. Accrual basis, we can see the account payable and account receivable right here. Account receivable shows up, account payable shows up too, right? So this is a timing difference. The biggest difference is the timing difference. When do you record revenue, sales, income, and when do you report expenses or invoice in payments? This is so again. To summarize this, the difference between the accrual basis and cash basis is that in cash basis, whatever you have received is income, whatever you have paid out are expenses. Versus accrual basis, whatever you have invoiced, even though you might not have received, is income, and whatever you're supposed to pay out, even though you might not have paid out, till yet, are expenses. So that's the timing difference of recognition of revenue, and then that's the biggest difference between cash basis accounting and accrual basis accounting. In certain industries, it is required to use accrual basis. In certain industries, it's only cash basis. It's really up to you. How you want to run your business, how you want to report it. In both cases, you have to still manage your cash flow. That means whatever money is coming in, whatever money is coming out. That's very important. Cash flow is another topic that we want to look at, because profit and cash flow are not the same thing. So you might be making 100,000, but in your account it could be only 10,000. Why that's the case? There's another whole video about this, and we'll be doing it. And then you can see it on our YouTube channel and other places too. So again, if you have any questions, reach out to us at info@akifcpa.com. Again, this video was about accounting cash and accrual basis, and what is the difference between income statement and when we are doing the timing, when we are recognizing revenue, when we are recognizing expenses. And then so that's what we were showing. So again, reach us out at info@akifcpa.com. We'll be happy to help you, and then we can get things done for you. Thank you. Bye-bye.